Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, taking a look at the markets here, and the bulls are at it again. We've got a bullish reaction to the jobs numbers on Friday morning, perhaps a little bit of bullish reaction to North Korea and US potentially entering into some talks, but what it boils down to is that we never lost momentum in terms of the bulls recovering from the all-out dump. There was a pullback here where we lost the higher low on the daily pattern, but we were looking at the weekly chart and looking for the equilibrium of higher lows and lower highs. We haven't broken resistance just yet. That level is 278.92. It was all bulls on Friday, and we actually held the 20-period 5-minute moving average the entire day, and that happens very rarely. I can't remember the last time that happened, but what it shows is all bulls. It was very clear that the algos were programmed for the bulls to come out on top. Every little dip saw a spike in bull volume to ensure that the bulls kept momentum in their favor. So it was just a solid move the entire day, increase in volume, close at the high of the day, and we are looking for a break of this resistance level. And once that resistance breaks, we're looking at about a few resistance levels before the all-time high. Really, the goal is the all-time high for the bulls after seeing this break. So just need a little bit more follow-through to be convincing. But then look at this weekly chart. No resistance until the all-time high. So the next level on the daily chart that we'd be looking at, the upper Bollinger Band needs to ascend and create some room to the upside. But after 278.92, I'm looking at 280.23 and 283.06 as the next couple levels. And on this daily chart, anything above 270.20 will maintain a higher low. There is a gap to be watching down here, but bulls in full steam ahead mode and not looking back at that gap at this point. Looking at the Dow, Dow's definitely a laggard. Look at the difference. S&P 500 breaking or right at this level. That would be like the Dow at 25,800. We did have a solid bull day. We saw a bull MACD cross on the daily. But again, a couple more bull days likely needed to get to the point where the S&P 500 is. So a little bit of a laggard action on the weekly time frame. It's still in a tight pattern. Inside bar on the weekly, and we'll watch for a break this coming week. Obviously, it favors the bulls because other markets have broken bullish, but Dow is clearly a laggard in this scenario. IWM is a leader. So IWM broke that resistance at 155.88 days ago. It broke it on Wednesday. And in the recent video, I said, let's see if IWM is I might have said canary in the coal mine, which is more of a negative implication, but just a heads up that, you know, markets are going bullish. If IWM breaks to higher highs, now we've got SPY on the verge of breaking to a higher high. Then we'll be looking for the Dow to be the laggard to follow for that break. Next resistance on IWM, 2 levels before the all-time high. 159.91, 160.63 all-time high right there. We're in breakout mode above the upper Bollinger Band. Weekly chart, full recovery. What dump? IWM is saying what market dump because it has been completely regained in 4 weeks. And just like that, the bulls are back in full control. So I'm well aware of the macroeconomic red flags on the economy as a whole, but until we see weakness on these charts, we cannot let our opinion and perception influence what we're doing because we will end up losing. The bulls have full control of this market at this point, and that is the bottom line. So checking the VIX. The VIX is now dropping down significantly, and just like that, we're almost erasing the entire bull move. So lower high and lower low, 6 red days in a row. Support is now 1331, and then we're looking down at 1250 as the next support. If we see a bounce, anything under 2049 will be a lower high, and the bears are in control. So VIX weekly chart continues to pull back. Haven't given back all of the move on the weekly chart. We will look for the weekly higher low to form, but obviously completely giving back a significant, I shouldn't say completely, but mostly giving back the significant bull move that we saw. And when you look at something like UVXY, which is a leveraged 3 times ETF, going bearish on spikes, let's actually look at it on the weekly time frame. If you go bearish on spikes and buy puts long-term out every single time, year after year, those end up being profitable trades. So if you went short anywhere, you know, 20, even anywhere $18 to $30 on this bull move, you are comfortably profitable, and it only took a few weeks to get there. So keeping an eye on UVXY, weekly middle Bollinger Band, that's been resistance forever. Bulls are trying to hold it. If we lose that level again, we're looking right back down towards those recent lows. And again, because of time decay, even if the markets trade sideways for a couple months, UVXY is still going to pull back. And that is because it is designed to go to zero, and it will inevitably reverse split into the end of eternity. And you can see, look at the 200-day or the 200-week moving average is 4,250. And here we are sitting at $13. And again, that's because of the reverse splits in the past. So I appreciate you tuning in. Bull is the word. The hourly chart is absolutely extended. Definitely want to make note of that. SPY and these hourly charts, very overbought. We're up in the 80s, and we had only green candlesticks, no consolidation on Friday. So we will be looking, depending on how extended hours went, we will be looking for some hourly healthy consolidation early to start the week. Thanks for tuning in. Have a great rest of your weekend. We'll see you soon.